9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man.
And I'm Avril Hong in Singapore. We're counting down to the open of the Greater China markets. Our top stories: Asian stocks swinging and oil edging higher as the U.S. launches new military strikes on Iran, tempering optimism about progress on a peace deal. Hong Kong stocks to resume trading after a holiday with chip and AI stocks in focus as Huawei unveils a potential breakthrough in advanced semiconductors. Though Beijing's crackdown on illegal cross-border trading may weigh on the market, threatening Hong Kong's liquidity and booming IPOs.
Well, Avril, it's going to be all about that Hong Kong reopen here today, as we mentioned, right? Two opposing forces that could weigh on this market, whether it's the chips rally and whether we see, of course, those Hong Kong-listed chip companies in China continue to see that catch up after that huge sort of rally that we saw onshore. There was that Huawei afternoon sort of press briefing thing that really sent things aflight. And then you have this brokerage story as well. So certainly a lot to contend with here today in the city.
Yeah, some cross currents when it comes to Hong Kong's reopening today. Take a look at the market action. Of course, also reopening Treasury cash trading. We're seeing how they've been rallying, and it's interesting how this is led more by the front end today. We are seeing Brent still below the 98 handle. Note that the most active contract, the July one, that's facing expiration on Friday. Take a look as well at what we're seeing in U.S. stock futures as the dollar looks pretty flat. We are seeing most of the region in the green today. Korea is playing catch up. The chip stocks are running higher, but you are seeing a reversal, a pullback from highs on these Japanese chip making related stocks. The banks are also coming under pressure, so the Nikkei is pulling back from the records yesterday on a day where Taiwan's market cap at 4.95 that has overtaken that of India's. And then take a look at how Greater China assets are setting up as well. As you highlighted earlier, some of these cross currents when it comes to the Huawei breakthrough. Will we see Hong Kong markets and the chip related stocks playing catch up today on a day where perhaps investors also passing that cross border stock market trading crackdown, Yvonne?
Yeah, we're going to have Yvonne from Bloomberg Intelligence to tell us more about the implications, of course, of this crackdown, which, we've seen before, right, from just a few years back. In terms of your agenda today, of course, we talk about that market reopen here in the city. Keep in mind, against all those kind of tailwinds around AI and chips, you also have the likes of Zhipu and Minimax, which was included in that HS Tech review on Friday. So certainly that might be more impetus for this AI trade to continue. Yuan strength certainly has been something that we've been focusing on as well. Wang Yi also there when it comes to talking about a U.S. visit. We have, of course, the Pakistani leaders in China as well, of course, as they look for China's more influence, maybe possibly in this Iran situation. And, of course, we do have earnings coming through from Xiaomi and Pony AI, which, of course, we'll talk about when it comes to the whole agentic embodied AI theme. We have Shirley Wong from Bloomberg Intelligence tells us more about that as well, something that is very key for of course, the China show. Let's get to, of course, that top story, which is Huawei's breakthrough on these chips, which led to that massive rally in Chinese semi stocks in the mainland on Monday. I'm guessing this is going to be a big one today, Avril, here. And the fact that I think what sets it apart, what really is the thing that really traders are gravitating to is the fact that they can do this without the lithography machines, right? It takes away the ASML sort of overhang for the chip making industry domestically in China. So, traders are saying this is quite a breakthrough.
Yeah, logicful, right? That's the touted technology that they might be using. But I guess the question also is, with this breakthrough, the extent in which they can create scale. But certainly that's created a lot of optimism, especially given how geopolitics is driving the self-sufficiency, the need for China to make its own chips and build up the AI ecosystem as well, Yvonne.
Yep, and it continues to be that trade, right? Where are those bottlenecks in this whole AI cycle that continues to drive momentum across the region here today? You talk about, Taiwan overtaking the likes of India, a nearly $5 trillion market cap now. That certainly just goes to show where investors are still preferring here at the moment. We'll watch very closely, not just the Taiwan space, the chip space here today, but we have that other side of the story as well, with Chinese investors now rushing to find alternative ways to buy and sell overseas equities after Beijing launched its most forceful crackdown yet on illegal cross-border stock trading. Let's bring in Bloomberg Intelligence's Sharni Wong, and she says when it comes to Futu, when it comes to fintech, now starting to take big hits to their pre-tax profit. Sharni, just talk about the wording that came through in the CSRC notice here. It was quite harsh. Parse through, what the language tells us.
Yeah, I actually think, first, it was unexpected. It was a surprise in terms of the timing, in terms of the scope, in terms of the wording, talking about the severe crackdown and how there's going to be a lot of penalties. They're going to confiscate the profits that they've previously made. It was a coordinated statement from the 8 ministries of China, and then also the SFC here in Hong Kong as well issued a notice on the same day, basically saying that the Hong Kong brokers, you need to step up your KYC, right? Like check your account openings, check that people's addresses are actually legitimate, like all of those things. So yeah, it was quite tough.
Well, I think Civic Securities came out with, I think it was like, in terms of the exposure, it's like $30 billion of assets that I think one of these brokerages holds. How large have you looked at in terms of the remaining exposure to the mainland market?
Yeah, so for Futu, they've already said that it's about 13% of their funded accounts. And then for Tiger, they've said it's about 10% of their client assets. So I think for the two combined, it's about $40 billion US dollars on our numbers. And so it is still material. But at the same time, this crackdown has been long in the making. It started in 2021. Actually, so it's been 5 years, and the brokers, they have pivoted away. So I think longer term is actually a good thing.
So do you get the sense that, it might be a bit manageable since this was a bit foreshadowed, in terms of the impact from the fines, the 2-year timeline to rectify these operations for the brokerages?
Yeah, so they will both have to take that one-off hit from the fines. So for Tiger, it is much more material. On our estimate, it's about 30% of their pre-tax profit. And then for Futu, it's less, at around 13%. So that's the one-off hit that they'll likely have to take. Now, these fines, it's still in flux. So I think the brokers are still going to work with the regulators on that. But over the next 2 years, the regulators have also asked them that they need to, end this illegal business. So that also gives them a path to an orderly exit, which again is a good thing. So, after these 2 years, we do anticipate the outlook to be a lot better because of this overhang would be gone by then.
Yeah, I was just going to ask. So longer term outlook for Futu and Tiger, what's next beyond the crackdown?
Yes, so because of the wording of the notice, it pretty much covers everything, from the removal of any onshore websites, even onshore servers. So now Futu and Tiger, they both have operations onshore in Shenzhen and also in Beijing. So it's likely that they're going to have to rethink their business model or potentially the operations, how they're going to structure their business to ensure that they comply with the rules. But then, again, as I've mentioned, especially Futu, they have made huge inroads into offshore markets in Singapore, in Malaysia, even in Japan, Australia. They're a very high-profile retail player. So I think longer term, the growth potential is still there. But then, the 10 to 15% of their business that comes from the mainland, that story is now over. Yeah.
What about for the implications for the IPO market? Because Futu was an underwriter for a lot of the issuance here. I mean, do you see a big impact on listings?
I actually think the impact will be minimal.
Okay.
So I think historically, mainland Chinese, they may have submitted, fake documents, right? So the SFC have warned about it. They open an account in Hong Kong. But I think it's more for US trading, right? So and the NVIDIAs, Apples, the like. So I think while Hong Kong IPOs, it will still be impacted somewhat, but I think the impact is more on US stocks, which is what they're more concerned about.
Okay, Sharni, it's great to have you. Thank you so much. Sharni Wong there, our Bloomberg Intelligence senior analyst for diversified financials here on set. Still ahead, we're going to preview the Hong Kong reopen with Aletheia Capital, who are warning of potential near-term disappointment when it comes to AI and robotics. And later, we're going to do a deep dive into China and Hong Kong's property sector with HSBC and why they're seeing a reawakening when it comes to demand. Michelle Kwok joins us there at the bottom of the hour. Of course, we're counting down the open of trade in Shanghai, Shenzhen, and the reopen in Hong Kong on this Tuesday morning in Hong Kong, where futures are flat this morning. This is the China Show. China futures are flat here this morning. We are, of course, counting down to that reopen of Hong Kong markets here. And obviously, there's a lot to catch up on, whether it's the semiconductor trade here. You are seeing SMIC and Hua Hong Semi indicated higher in the city today after we saw double-digit gains for some of these onshore equities here in the back of that Huawei news. So certainly that's one thing to contend with. We talked about the brokerage side of things. Let's talk more about that and earnings. Let's bring in Vincent Chan, China strategist at Aletheia Capital. He joins us here. So we obviously had that correction in March when it comes to China markets. How are you looking at the conditions now?
Well, in terms of valuation, the China market is much more reasonable after the correction in March. And if you compare to U.S. market, for example, it seems that the China market can have a lot to catch up in terms of valuations. The bigger problem, however, is that the final demand in China is still quite weak. If you look at consumption, investment, and earnings of Chinese companies are weak as well. Because we will expect, well, if you look at analyst forecasts in the last few years, MSCI China's earnings always 15% growth. Okay, but actually I just checked the number. 2026 consensus MSCI China earnings already revised down to 6 to 7% growth already. Earnings seems to be going to another round of disappointment this year. I think the bigger problem is that the really big companies in China, China has two groups of companies. Some of them are very big. Their earnings are very stable. Banks, the internet companies, whatever. They are not growing fast. They are low to mid-single digit type of earnings growth. And then you have another group which have very exciting stories. The electric vehicle, solar, not that exciting anymore, but anyway, AI. But they don't really have much earnings. They are very competitive globally. They are very competitive. But if you look at their earnings, they're not delivering.
You don't see the clear path to sort of monetization, even when it comes to the AI theme right now?
No.
Okay.
Every time DeepSeek has a new model, you cut the price by another 80% or 90%. So, well, it grab market share. Yeah. That definitely, yes. But pricing power is still a big part. I think except for car battery, that's probably one sector you see some pricing power from Chinese companies. Most other sectors, great stories, but not much pricing power, not much profits.
Avril, I think you have a question.
Yeah. Does it speak, though, Vincent, to, I guess, perhaps their different approaches versus, say, what the U.S. AI companies are trying to achieve? And in China, maybe AI, frontier technology, the idea is that it's more for common good. So they're okay with subsidizing the whole ecosystem in a way.
Yeah, there is a big debate here. Long term, I think, well, no one knows at the moment whether the U.S. strategy of high capex, high pricing of AI products versus the China model of lower capex and much lower pricing will work out in the long term. Or maybe they just carve out different markets. But as an investor, well, sometimes we cannot be that long term. We have to confine our horizon in like 2 years, 3 years, whether you can deliver earnings. At the moment, we haven't seen it happen yet. That's the only thing I can say.
Talk to us as well about what you're seeing in terms of regulatory action. I mean, we're hearing in the past week about how Chinese authorities seem to be, trying to constrain some of these cross-border stock market flows. Do you see that as a headwind?
Let's look at it from a background perspective. China always are very cautious about unregulated offshore capital outflow. This has been the case from early 90s onwards, and it doesn't change. And I don't think it will change ahead. And secondly is that we probably need to think about another angle, is that in the last few years, these kind of cross-capital flow, a lot of them actually goes to US AI companies, Korea and Taiwan semiconductor manufacturing companies, which end up are and will be major competitors of Chinese companies. So from that perspective, I think there are quite a strong incentive from both a financial opening management, financial system management, as well as a national competitiveness to regulate this part of China's capital outflow.
You mentioned that China, in order to close that valuation gap with the rest of Asia, if it gets and plays its cards right, what card would they have to play, you think?
At the end of the day, it's consumption.
Okay.
With the kind of stage of development, China's consumption growth should not be 2% in nominal terms. It should be more like 8% in nominal terms. And the biggest gap is not so much in goods consumption, but in services consumption. Because if you compare the retail sales of China as a proxy for goods consumption versus the US consumption of goods, they are actually quite similar to each other already. On a per capita basis, no, but absolute size. But service consumption, China is significantly left behind. The key at the end of the day is how to boost service consumption in China. But this would necessarily involve some kind of redistribution system such that everybody get a bigger income, so they are more willing to spend on consumption services. And then the service of consumption, because people's wages going up, will charge you a high price. And then you have a virtuous circle going on. At the moment, be frank, I think consumers are actually enjoying decent consumption, decent service consumption in China, but at a much lower price. And it is not counting GDP. How to make that become a more expensive, but a bigger GDP contributor of the whole service sector? I think that's still the long-term key for China.
Yeah. It seems like when it comes to the domestic side of things, you're still not too optimistic. Earnings are not too optimistic. For anyone that wants to still stay invested in the China market, what to do then?
Now, I think, China's manufacturing companies and its technology companies are very competitive.
Okay.
I don't think we need to debate on this side.
Sure.
So some of them will be winners. I think at this stage, it is much more going into stock picking rather than the bond market, because the bond market is very much dominated. Look at the biggest company in China. They mainly serve the domestic market. They have very large market share. So their growth largely constrained by China's GDP growth, which is not too strong. But some of the smaller companies probably could, through exports, going global, grabbing market share somewhere. But I think the key is you need to be selective to find the sectors that have the pricing power. I think this is really the most important thing, not so much technology, but the pricing power.
And Vincent, there's also, that ongoing debate when you look across the region, given the AI leadership of markets such as Korea and Taiwan. I mean, China at this stage, do you see there being enough of a narrative that could fuel things along? I mean, what could change this?
I think the China narrative, purely from a narrative perspective, actually even stronger than the Korean and Taiwanese company. Look at the AI model download. China's AI model download is only second to the US. But you don't find it in a very investable large cap representation in the stock market. Maybe, for example, some of the bigger internet companies like Alibaba spin off their AI operations, their cloud operations. It will make the markets more interesting on a certain part of it. But at the moment, it's either the AI story in China is either they are very small startup companies, which at this stage very difficult to see the earnings trajectory, or they are in a very big companies, which is basically the AI part of the story is being overshadowed by some other much slower growth business. And on the equipment side, you could expect, for example, the recent Huawei news, you probably expect that there should be some more hardware plays on this AI theme.
Yeah.
But again, the problem is that most of these AI-related stocks, their absolute size of the earnings are still very small, but they are trading at 300, 400 times PE. So
yeah.
I mean, that's the dilemma of China.
Vincent, it's great to have you. Vincent Chan, their China strategist at Aletheia Capital, as he was talking about when it comes to some of the semiconductor hardware sort of sectors here, we're certainly looking at when it comes to some of the chip space here. And yes, as expected, we are seeing quite a bit of a catch-up rally here from the likes of SMIC, Huahong Semi, all up some 15%, ASMPT as well, after, of course, Huawei announced this new development here, a pathway to shorten that gap with the likes of industry leaders like TSMC in making these advanced chips as well. The pre-market is looking like this here in Hong Kong here today. We're looking for very much still a flat Hang Seng here, which is exactly what Vincent was saying, right? You can't really exactly buy the index. It's really about being selective stock pickers here in this market. 678 though, it is a stronger renminbi here this morning. We have the open, of course, the agenda and the like here coming up. This is Bloomberg.
Taking a look at Hong Kong pre-markets, of course, we've already seen how Hang Seng Tech has risen almost 2%. And against the backdrop of that continuation of the AI trade and the extent in which these Chinese chip-making related stocks are extending yesterday already, the reaction we saw on the mainland as Hong Kong markets reopen. Of course, the cross-current here is coming from China's crackdown on brokerages and the extent in which that could perhaps derail a bit of what we're seeing on Hong Kong in terms of the IPO boom, although some of our colleagues have also highlighted that maybe, things are still looking solid, Yvonne.
Yeah, because there's still other ways. I think investors are still looking for alternative ways to still, of course, keep that China exposure, whether it's opening a HSBC account or going through the Stock Connect and the like. So certainly that continues to be a key story here. Futu, though, we are seeing there a downgrade from the likes of Goldman Sachs, I should say, cut to neutral there for the stock. They're talking about the hit to earnings could be quite substantial. So certainly that's one thing that we have to track there. They're slashing that price target as well to 102.13. And Kuaishou as well, upgraded at Morgan Stanley. They're saying when it comes to the market, underestimating the upside from that potential Kling spinoff. So let's take a look at when it comes to, of course, the chips, though, because that is still going to be why we're seeing HS Tech higher and why we're seeing really the tech space looking pretty good. There you go. SMIC, Huahong, and ASMPT all up double digits, 15% gains here as well, of course, on that Huawei development that we got in the last, 48 hours or so. We have the open coming up next. This is Bloomberg.
Welcome back. You're watching The China Show. We're counting down to the open of markets. Of course, the long holiday for Hong Kong. And we are expecting a bit of a catch-up as far as chip-related stocks are concerned. But we are seeing the reversal in some of these chip names in Japan, for example, along with the banks. So that's the drag you're seeing on the broader benchmark for the region. China Big Bang price targets getting upgrades from some of these investment banks. So that could be interesting kind of cross-current that we see today as well in the markets, Yvonne.
Yeah, I think that was the Morgan Stanley call about, looking at the industrial upgrades really as maybe a way that would bode well for the banking industry. So certainly that's one thing to watch in terms of some of these China lenders here today. But in terms of your market open, it looks like we're looking at a pretty flat Hong Kong reopen here. But certainly there are nuances here in the whole tech trade of things. Onshore markets are doing this. We actually did see 1% gain or more in the CSI 300 yesterday. Potentially that brokerage clampdown that we're seeing from regulators, does that put more impetus for Chinese investors to tilt more domestically into Chinese stocks? That certainly is one key question. But we're coming off a little bit of the gains yesterday here, and we're watching very closely when it comes to crude markets. So we are following the oil price slightly lower here today, just given the fact that, just the thought of just some sort of peace deal was enough for the market to kind of cool down there when it comes to oil traders and what they were looking at here today. But then again, here you go. We're seeing when it comes to Capricorn Tech, though, know, some of these chip stocks which surged yesterday onshore seems to be coming off a little bit as well, but you're still seeing CATL do okay here this morning. We're also watching when it comes to Shenzhen, seeing a little bit more downside here today. If you take a look when it comes to the Hong Kong reopen, here you go. This is the big one. We're pretty flat when it comes to the benchmark. In fact, we're actually seeing declines now. We're down about 0.4%. We're just around that 25,500 level. But HS Tech is certainly standing out. And I think it's really the chip space. But you take a look at some of the big, China tech internet platforms and the like, and they're not participating in this as well. So you're starting to see, once again, that bifurcation within the China tech space once again. Tencent, Alibaba, Baidu, Meituan's down close to 4%, Xiaomi as well, which comes up with earnings a little bit later on. So that's not doing too well, but really, it's really just the semiconductor space that might be lifting HS Tech here today. When you take a look at what comes to offshore China, at least we're seeing, we're well below the 680 handle when it comes to renminbi. So you continue to see that dollar cooling, which could help overall here in the region. But then again, a lot of the focus seems to be here on Taiwan, right? They just overtook India as the 5th largest equity market in the world. So certainly Taiwan, the north sort of Asia benchmark still looking like it looks better, maybe relatively speaking, to China. Take a look when it comes to chip space, though. That's the bright spot today. So there you go. You're seeing the likes of SMIC, Hua Hong Semi, ASMPT, they're all surging here today. Certainly there's going to be a lot of optimism around this Huawei chip that was announced. It was sort of this late afternoon session surge in the stocks yesterday in the onshore market because there was this Huawei sort of press briefing that really people were focusing on to really send these stocks higher. In terms of some of these HSI reviews that came out on Friday, this is sort of extension of some of the moves that we saw, but we're actually seeing them come off here. So Zhipu and Minimax have been included into the HS Tech index in terms of what the additions on the HSI. So there's a bit of biotech. So you have B1 Medicines, you have J&T Global Express, you have Chalco, which now have also been added to the HSI as well. All right. Lots to unpack here. For more on Hong Kong markets, joining us now is HSBC Head of Hong Kong Equity Research and Asia Real Estate Research, Michelle Kwok. She joins us here. Michelle, it's great to have you. You're coming back from a holiday. I'm just wondering, we've seen this whole North Asia sort of narrative. There's been waves of it, but really continues to be people leaning towards these as the whole AI picks and shovels trade. And Hong Kong seems to be continuously left behind. Have you seen any change in sentiment of late?
I think you're quite right. Anything that's out of the AI theme, clients immediately start asking about the opportunity costs. What am I losing out? If I'm not investing in AI, should I invest in other sectors? How much am I losing out? So that's question number one. But also in terms of the Hong Kong market overall, clearly it hasn't really performed that well relative to other parts of the world. But clients aren't that discouraged because if you actually look at subsectors, there are actually opportunities to generate that alpha. If you have that risk appetite to front run a bit, to spot that cycle in any cyclical sectors, you are actually able to front run. I think real estate is one example, Hong Kong real estate market, but also there's a whole lot of good stuff happening in Hong Kong. So we saw the good GDP print, visitor arrival, retail sales actually shaping up to be quite optimistic as well for the full year. Should be 12% versus 1% up last year. So I think the other point that I really like to stress is liquidity in Hong Kong, around 260 billion ADT year to date. I always stress the point about liquidity because having that liquidity is really going to encourage risk-taking.
Yeah, I mean, you said turnover has been, 260 billion. Do you expect turnover to stay sustainable?
I think because we now have a rebalancing act, and with the 500-odd active applicants coming through, potentially to get listed, we are going to have a diversification process in the number of Hong Kong stocks that get actually listed. So the composition of that is going to encourage sector rotation. It's going to encourage potential fund flow into some of the underinvested sector. So I think really about going bottom up to spot sectors that actually will be able to turn around with optimistic earnings upgrade.
To what extent is this all underpinned by what you're seeing in the property recovery? What are the signs you're seeing there?
So I think for Hong Kong real estate, very much a consensus call already. And I think a lot of this is coming through to drive the wealth effect that we wanted to see. And it's already played out as expected. The question now is actually how much home price is going to increase. Is it going to be 10% or is it going to be 15%? So there's a wide range of a consensus forecast out there. But I think real estate is a very important element driving the optimism, because historically what we have seen is home price in Hong Kong has had a very high correlation to the performance of HSI. So that certainly is a very important sector to continue to monitor.
And what about on the mainland? Are you seeing already the signs of bottoming out as well, or do you think the housing sector there needs a bit more help?
So the core of our thesis over the past couple of years that was a little bit unpopular 3-4 years ago is about a 2026 inflection. And this inflection to us is now already playing out. We think we are there. I think importantly, the market's mindset has also greatly changed. They have all become a lot more practical. So from expecting a nationwide recovery 2-3 years ago to now pretty practical into expecting only top-tier cities leading this recovery. So what we have seen in the China market is also the liquidity in the resale market. So secondary homes volume have actually chased up since fourth quarter last year. And importantly, this is against the backdrop of no big policy announcement.
Yeah.
So what that means is that we have arrived at somewhat of a blue sky scenario without new policies, but transaction volume already recovering. And also in the new home market, selective pockets of strength in some cities and projects have already seen pricing being marked up.
And you mentioned it's really going to be this sort of mass market sort of recovery or demand. What, in terms of just how to invest around that space? I mean, you prefer what, CR land, C&D, season. Why these three?
I think CR land is really an industry bellwether. It's a consensus call. Everyone has a buy rating on CR land. But I think one of the key things that the market could potentially be missing is the onshore investors' participation. Very interesting. Onshore southbound holding in China property stocks have been on a very consistent rise over the course of the last couple of months. Actually, that increase started from September 2025. So what are onshore investors buying? They're buying the policies working out, as we have seen. They're buying a volume increase and a progressive stabilization in the market. Cheap alone is not a reason to buy any industry. But so that increase in southbound holding by people that are very much on the ground, they have a thorough understanding of the industry, that is very important signal to us.
You mentioned also as well, when it comes to the Hong Kong property market, that investors are not as concerned about the U.S. rate uncertainty. So even just the threat of even higher rates, why are they not too concerned this time around?
So first, developers' balance sheet recapitalized. And second of all, from a homeowner perspective, I think there is also a great supply-demand rebalancing. The next 5 years completions is going to be lower than the previous 5 years. And mainland Chinese buyers is an important source of demand for the Hong Kong housing market. And I think what's also very important is, for the very first time in history, the China housing market is not competing with the Hong Kong market. What I mean by that is, in the past, if you are wealthy and you're in China, you may have to decide for yourself if I want to buy in Hong Kong or in China. But today, the decision can be made quite easily because Hong Kong is enjoying a positive cost of carry. So I think that inflow of capital from mainland China into the new home market, that will continue to be a source of important housing demand.
So net, Michelle, it sounds like positive for Hong Kong markets, both on property and maybe stocks. Can you close the loop a little for us? I mean, when it comes to how perhaps there can be a bit more encouragement for upstream AI in Hong Kong?
Yeah, so I discussed earlier about the diversification. At the moment, the Hong Kong stock market scene is really dominated by downstream internet names that really monetize on consumer clicks. In the future, it's going to be about AI, it's going to be about deep tech, some consumer and healthcare stocks. And I wanted to stress that the last 10 years, why this is an important diversification is because when we look at the average trading volume of different sectors, conventional old economy sectors like real estate saw a dip in average trading volume. But when we look at healthcare and when we look at the MTM space, we've seen a 10, 11-fold increase in trading volume in those spaces. So that diversification is going to be offering a lot of opportunities for investors to come in to invest in anything that they want in a deeply liquid and highly regulated offshore market.
Michelle, it's great to have you. Michelle Kwok there, head of Asia Real Estate and Hong Kong Equity Research at HSBC. Coming up with central banks and inflation in focus for markets this week, we have SocGen's global chief economist, Wei Yao. She's going to give us her take on the impact of the war in Iran. She's going to be joining us in the next hour. This is Bloomberg.
Watching developments between U.S. and Iran as well, the U.S. military says it has carried out what it calls self-defense strikes in southern Iran, including on missile launch sites and boats placing mines. And this comes just hours after President Trump said negotiations with Tehran over a deal to reopen the strait were proceeding nicely. For more, let's speak to Bloomberg editor Michael Heath. Michael, so there was a lot of anticipation, especially over the weekend, for some form of an interim deal, maybe an extension of the ceasefire. But it seems like, again, the reality on the ground, based on what we're hearing on these strikes versus what the U.S. president is saying, there's a bit of a gap there.
Yes, look, there is a bit of a gap, but by the same token, I think we've, even during this ceasefire period that we've had since early April, there's been spot fires that have erupted every now and then. And the US was targeting, or it said it was targeting the laying of sea mines, which has been a real concern for trying to get the Strait of Hormuz reopened and for the safety of commercial shipping. So they say it was a defensive action, that that's what they were targeting, boats that were doing that. And by the same token, we've also seen over in on the border of Israel and Lebanon, we've seen firing back and forth there as well, even though, theoretically there's a ceasefire between Israel and Lebanon as well. So, look, there are spot fires, which doesn't necessarily mean it derails the negotiations. I mean, there are meetings going on at the moment in Doha. Pakistan's military chief is over there, who's been a key negotiator. So it does seem like there's a couple of tracks going on. There's a bit of fighting happening, but there's also quite a lot of talking happening as well.
I think when people hear ceasefire, Michael, I wonder how much do they anticipate or assume that also includes the reopening of the Strait of Hormuz. Do you think that, experts out there, market participants, are they still underestimating the possibility that the reopening of the Strait of Hormuz could be part of a deal?
Yeah, look, I don't know if they're underestimating it. I think previously that was the case, but there does seem to have been, quite a lot of reporting from both sides, behind the scenes discussions that reopening Hormuz would be part of it. So the idea is that you would have an extension of the ceasefire, about 60 days, and simultaneously Iran would open Hormuz and the US would lift its blockade on Iran. During that ensuing 60 days or 30 days, there's been different reports, the rubber would really hit the road in terms of negotiations of trying to come to an agreement on Iran's enriched uranium, about the destruction of that or the storage of that, and putting an extended moratorium on Iran enriching any uranium. So these are sort of the levels that are going, the stages they're going at. Now, obviously, for us, outside of the region, the opening of the Strait of Hormuz and for the global economy is hugely important, but it has been mentioned fairly regularly there as well. So I think it is, it is reasonable to anticipate that would happen. But again, things can move so quickly here. They can be derailed so fast as well. We've heard it many times before. So it's really just a watch and wait and be nervous until you actually see it happen.
All right, Michael, thank you for that update. Of course, Michael Heath there, our Bloomberg editor, with the latest. And the war in Iran was high on the agenda for President Xi Jinping's meeting with the Pakistani Prime Minister Shehbaz Sharif. Now, news of the meeting is the top story across state media today. Stories highlight Xi's message thanking Sharif for Pakistan's role in mediating talks between D.C. and Tehran. Now, today's People's Daily's front page is also dominated by Xi's meeting with the Serbian president. State media describes Xi's meetings with the Pakistani and Serbian leaders as proof of China's, quote, solid and enduring partnerships with its longtime friends at a time of global tensions. Let's get more on that Pakistani Prime Minister's meeting with President Xi. Our Asia Economy and Government Executive Editor Dan Tenkate joins us now. What did you make of some of the comments? I mean, it seems like Xi was praising, of course, course, the Pakistanis' role in mediating this war. What does China's role and how does it all fit in all this, do you think?
Yeah, I think if you zoom out a little bit, we had Donald Trump there, we had Vladimir Putin there, and now we have the Pakistanis there. There's clearly a lot going on behind the scenes. What role China plays in that is still very unclear. They've obviously have an interest in getting the Strait of Hormuz open. They want fighting to stop. At the same time, they haven't shown really that they want to invest a lot of blood and treasure to make that happen. So the latest reports, some reports indicate that Iran wants China to take the highly enriched uranium, possibly. This could be a solution to that problem. They definitely don't want it in U.S. hands, as Trump has been saying. They've also wanted to keep it in the country. So whether China could play a role in that is one major question. The fact that Asim Munir was there as well, Pakistan's field marshal, who basically runs the country, also indicates that that something is going on behind the scenes, and Munir is heading to Doha for these talks in Qatar. So how that actually plays out, we'll try and get more from the Chinese today, but we're not exactly sure.
So things going on in the background, a number of brokers involved in maybe trying to mediate for a deal as well. We're hearing from Saudi media that Iran is looking for guarantees from China before any U.S. deal. I mean, what do we know about this and the extent in which this can be binding?
I think that's the major question. What do these guarantees actually entail? It could be that China will have their back at the UN or oversee the IAEA to kind of monitor this highly enriched uranium that comes in. If it's something like security guarantees, it's very hard for China to agree to something like that. So mostly it would probably be on the economic side or at international organizations. But again, China has not ever, and certainly during this conflict, wanted to get involved militarily at all. So if it's anything along those lines, don't expect that to happen. So the devil's really in the details of what sort of guarantees Iran would be looking for.
Dan, thank you. Dan Tenkate there, Asia Economy and Government Executive Editor on that meeting between Pakistan and China. We got plenty more ahead. This is Bloomberg.
Welcome back to the China Show. Here are some of the other big stories we're following from around the world. One of Samsung's smaller unions reportedly seeking to halt a vote on a tentative wage agreement between the company and its largest union. Yonhap says the union representing non-semiconductor workers plans to file an injunction with the Suwon District Court today. The tentative deal Samsung struck last week staved off a potentially catastrophic strike. BHP has reportedly pulled back on key decarbonization projects in its West Australian iron ore operations. According to leaked internal documents cited by The Guardian and ABC Television, the company last year shelved or deferred solar, wind and battery projects. A BHP spokesperson says many technologies the mining industry needs to achieve net zero are not yet ready to deploy. The Shanghai Stock Exchange says it'll hold a meeting next week to review the IPO application of Chinese robotic startup Unitree. According to its prospectus released in March, Unitree was planning to raise about $620 million with a listing on the Star Board, and it said the proceeds would fund research into AI models for robotics, develop new products, and expand manufacturing. Yvonne?
All right, checking markets here right now. You're starting to see stocks pair some of the gains here. Oil has been also climbing a bit now on reports about the U.S. and the strike on Iran. But certainly when it comes to the hardware versus internet side of things, it's a clear winner here today. When you take a look when it comes to Lenovo, we're up another 12% after the back of last week's earnings here. And this whole re-rating continues really for the company. Hua Hong Semi, also the chip space doing very well, up 11%. On the flip side, look at Meituan. Kong. We're down some 5%, extending those losses here today. Keep in mind, Xiaomi also reports a little bit later on as well. When it comes to WuXi Biologics, we're watching also the biotech space here today. So they've announced a share buyback. So the stock is up about 2%. So repurchasing shares up to $400 million as well. That is lifting the stock here. HS Tech Edition talked about Zhipu. We talked about Minimax. Perhaps it's just sort of a profit-taking sort of story here that you're seeing when it comes to these stocks here now that it's official that they have joined the HS Tech index here. We are seeing a bit of a sell-off here today. Minimax is down close to 10% here right now. And we're watching, of course, some of the additions as well on the HSI. B1 Medicines, JNT Global Express, Chalco, among the like there. Two of the three still doing okay this morning. So certainly that's one thing to watch as we start to see and we count down to U.S. markets reopening as well. We take a look at when it comes to the greater side of Greater China markets here. It doesn't look like to be a too positive story if you look onshore or offshore here today, with chips really the rare sort of bright spot in all this as well. But we'll continue to watch the space here. HS Tech is also coming off some of the initial highs here. We're only up about 0.5%. Well, a lot more on the way in the next hour. You're watching The China Show. Welcome back to the China Show. A look at the HSI half hour into the session. We've come back from that 3-day holiday in a very uneventful way. Take a look at that. We're up about 1/5 of 1% here today. We're unchanged when it comes to the H-share market. But Avril, as we've been talking about, you got to look at different pockets of this market, right? When you look at chips, for example, that continues to be a up arrow story.
Oh, bottlenecks, right? That seems to be the word that we're latching on these days for AI especially. So look at how the chip-related stocks are faring after the mainland markets had their own party just a day ago. I think that is the catch-up you're seeing that is helping to offset what you're seeing on the Hang Seng in terms of the drag for the Chinese internet-related stocks. On the Nikkei, you're seeing some reversal for the chip names. But broadly, the gauges, you look at South Korea, that's where the catch-up is. It's interesting. Today, Taiwan, in terms of market cap, has exceeded India's $4.95 trillion. And this is something that's really been driven by the relentless rally. If we can take a look at this terminal for you on what we're seeing from TSMC. Today, that chip maker, you're seeing it pulling back a little bit, but investors are still trying to look for other ways into the AI play. So the likes of MediaTek, for example, those are the stocks that are helping still the TAIEX in terms of that market cap. Take a look at how it has overtaken India. It's really this narrative of when it comes to markets and stocks now, the AI haves and have-nots. Speaking of, take a look at how U.S. stock futures are faring. Of course, this is on from a long weekend as well, and perhaps the continuation still from Friday where some of the U.S.-Iran optimism was fueling stocks. If we can take a look at what we're seeing on the macro board, flip the boards if we can, in terms of what we're seeing on the geopolitical backdrop as well, and how you're looking at oil prices. They are still sitting below the 99 handle. That seems to be clearing out some of these concerns for treasuries. They are rallying. We're seeing cash trading return, of course. It's interesting because the front end today seems to be leading what we're seeing on the longer end of the curve. So maybe those structural concerns are still weighing on the back end, the long end of things for treasuries, Yvonne.
Yeah, that flattening yield curve certainly is one thing to watch. But as you say, right, there's a lot of questions of whether this, the peak is in when it comes to global DM yields, at least. It's interesting that oil markets are a little bit more elevated here during the Asia session. There has been some U.S. reports from the New York Times about U.S. strikes on Iran sites as well. So that might be leading why we're seeing a little bit of reversal here in the oil story. But for a deeper look at how markets are faring, let's bring in our team. Our markets reporter, Anthony Stevens, is here along with Robert Lee, our Bloomberg Intelligence senior analyst. Anthony, I'll start with you on chips, really. We talked about this yesterday. It seems like it's continuing here in Hong Kong
so
today.
After we spoke about the Huawei innovation, right, the stocks were up around 6%. When we spoke, they finished limit up. So that's 20% on the mainland. So, it's a bit reasonable to expect some moderation of that bullishness today, given the little uptick in like the Iran tensions. We have other kind of moving parts as well in Hong Kong as it comes back, right? We have that regulatory crackdown on Futu last week. That's kind of coming into the China internet sector here, reminding people that regulatory risk still is alive. Meituan is probably the focus of that kind of concern, given that it's down 6%. This is a company that was kind of tapped by China regulators before. So, investors have very long memories, and they're a little bit traumatized on this topic. On the other side, though, we continue to see this search for bottlenecks. It's becoming a cliche at this point, but we do have these outsized moves that kind of justify attention to this team, right? Even today, at a headline index level, you see some stuff like Samsung Electromechanics up 18%. A lot of stuff in Taiwan is up again 8-9%, and Lenovo, a name that you guys have talked to directly, that stock's up double figures now after the CFO basically cited kind of relentless demand for AI, right? So the tech space is becoming quite dispersed, but following that dispersion is driving a lot of alpha. I just want to leave with one quick kind of data point, right? MSCI momentum is outperforming normal MSCI by around 30% plus.
Wow. Okay. Everyone's touting this Huawei chip. What's the Robert Lee sort of impression so far?
Okay, I think it's a very interesting development. It was announced at a technical symposium, so as opposed to a full-blown global press release, we're here, we're going to turn the industry upside down. So I put it in context. Also, another bit of context, you look at the reaction in markets today, although many of them were closed yesterday because of holidays, TSMC's share price, etc., has barely changed. So I think that's worth bearing in mind. But there are parallels here with DeepSeek, if you just bear with me for a second. DeepSeek and the rest of the Chinese AI companies, due to export controls, cannot import the bleeding edge NVIDIA chips. Therefore, that has forced them to innovate and find very clever ways around it, focusing on software optimization to try and boost the performance of their models. Similarly, on the chip side, Huawei cannot, and no Chinese company can legally import EUV equipment from ASML. So again, that's forced them to innovate with the full weight of state backing behind them, because as you know, China is pushing for self-sufficiency in semiconductors. So what they've announced is this thing called logic folding, which if you just bear with me very briefly, if you considered an industrial park, you've got some factories, it's all owned by one company in this little analogy. A lot of different factories, a lot of different warehouses. You can imagine the goods or products are shuttling between the factories and the warehouses continuously. Chips work in a similar way because they're basically millions and millions of little calculators doing calculations with bits of memory on the side, where once you've done a calculation, the sum is solved. So what they've done in order to reduce the latency or the delay it takes to shift data and information from one part of the chip to the other, they've effectively stacked one die or bit of silicon on top of the other, and in order to reduce the latency, to reduce the path that this information has to take, they've shortened the path, and therefore they are reducing the inherent delays within the chip. So according to what they said yesterday, by 2031, assuming this new technique is successful, then that should produce chips that in performance terms are on par with TSMC's 1.4 nanometer chips. So TSMC is due to go to 1.4 nanometer, I think, in 2028, and Huawei's targeting 2031. The conclusion of all of this is China is being hugely innovative across the board in tech. They're narrowing the gap. I think, again, it's a bifurcated world. They work within their own ecosystem. But there is strong momentum behind the technological progress. Yeah. And if this new technology can be proven to be cost efficient and to generate chips or produce chips at good yield, I think that will benefit the entire China tech food chain. Smartphones, AIs, laptops, you name it. So it's a very, very interesting development.
So how does that help on the monetization front? Because that seems to be, what you've latched on, that some of these AI players in China are struggling on that front. How does that help the ecosystem overall?
Well, again, because there is a ban, an export ban on these bleeding edge chips from NVIDIA. So therefore, if China is able to produce more advanced chips domestically, that will not just benefit their AI players. Again, the example that Huawei talked about yesterday is that a new dedicated smartphone chip called Kirin is due to launch in September of this year. This probably coincides, and I just checked my notes, with the Huawei Mate 90 series, which is their leading-edge smartphone, roughly in terms of performance goes head-to-head with the iPhone 18. So again, China's making huge progress on chips. Chips underpin everything within the electronics world.
Yeah.
They are the computational engines that everything in this world relies on. So China's making very strong progress on that. It hasn't completely narrowed the gap, but the gap is narrowing.
Anthony, so we're seeing chips. It's all about the hardware side of things. Is there anything that could derail this?
Look, I think just to clarify on the non-chip side of things, I just want to share a data point. China basically has the gold and silver medal on the LLM ranking boards on Open Router, right? So DeepSeek and Tencent are both up there. They're just not monetizing that token usage, right? And that part of that is that they want to kind of gain this market share upfront as a loss leader until they can figure out how to monetize it best, because these AI business models are kind of still in development. Now, that is a big market concern, right? Because they do not have the balance sheet or the access to capital markets that the US hyperscalers do. And you're starting to see that play out massively. If you bring up Tencent versus Alphabet, for example, or Alibaba, versus any kind of US company, right? The lag is quite big. And this is just basically a discount to China's AI monetization ambition, not the technology side, which is well accepted to be a coherent second tier.
Anthony, you've been talking about robotics too, right? We've been talking about how this is sort of the next leg in the whole AI cycle here today. Obviously, Unitree talking about the Star 50 IPO certainly is lifting things up once again.
China is on much firmer footing monetizing this stuff, right?
Okay.
This is right in their engineering wheelhouse, right? They've led it very early on. Before robots were intelligent, China was already a leader, right? And now that you can put AI into robots, they're really well placed. And a lot of the growth that you're seeing in the Japanese and Korean names are also China related, right? If you saw the import numbers from Japan into China, they were very strong. And a lot of that is semiconductors and robotics. So China is really well placed. And I think it's a really good idea to tap the market when it's hot for this theme.
How are you looking at that sort of trade? I mean, I know you don't focus. Do you focus on robotics at all, Robert? Or
No, look at everything.
I mean, the AI, this whole agentic embodied AI theme right now. I mean, is that taking a lot of your focus and coverage now?
I think, like Anthony said, if you cast your mind back probably 10 or 15 years ago, the global leader in robotics, not just industrial robotics, but these humanoid robotics, was Japan. And so China has seemingly come out of nowhere and produced robots, again, if you look at the Spring Festival, which are quite, astounding, incredible. I'm running out of superlatives. So in terms of their mechanical ability and their agility, it really is on another level. The only slight caveat I would say is whilst there is a degree of automation going into them, they're by no means fully autonomous. So the software side and the AI side really needs to catch up. And maybe I shouldn't name check Ronnie Cheng, Malaysia's pride and joy on Comedy Central. But there was a very interesting YouTube clip where he looks at a domestic humanoid robot with some very interesting conclusions made. I would highly recommend people look at that because whilst these are impressive on the surface, there's a bit of a sting in the tail with his clip. I'll let people watch it. So I think that the conclusion is the AI side, the autonomy side is not yet there. So unfortunately, we're not going to see household, robots doing our household chores just yet.
Just when I got my hopes up. All right, Robert, thank you. Robert Lee, our Bloomberg Intelligence senior analyst, and of course our markets reporter, Anthony Stevens there. Avril, you got some breaking news when it comes to Sri Lanka.
Yeah, we got some central bank action here and how the central bank has raised its policy rate by much more than anticipated. I mean, I think estimates was for it to be at 8.25%. You're seeing a hike of 100 basis points here. And we had seen how I think 8 of 10 economists expected a hike of between 25 to 100 basis points. 2 expected it to be kept steady. And this is at a time where the Iran war has really thrown a spanner in the works of the economic recoveries of some of these emerging market economies. Sri Lanka had been recovering from its worst financial crisis in decades, aided by some of these IMF loans, and to help defend the currency. Certainly that's something that we're seeing in other emerging markets as well, including India, Indonesia. Central banks have had to step up defense of these local currencies. We're seeing that in the form of this benchmark rate hike from Sri Lanka. We'll continue tracking the market reaction. This is Bloomberg. Well, continuing to track these negotiations that are said to be ongoing between the U.S. and Iran, we're hearing from the U.S. Secretary of State Marco Rubio while he's in India, talking about how these negotiations with Iran will take a few days. The tone here, I think, is quite cautious. I mean, we did get some optimism over the weekend that they were making really some headway. They would announce something soon. More recently, the U.S. president has talked about how, they're not going to rush into a deal. And Rubio here also highlighted how the U.S. president said he'll make a good deal or no deal. So certainly watching some of the rhetoric coming out from these U.S. leaders and also some of these other big events to watch this week, continuing, of course, to track some of the central bank action. We've just got Sri Lanka with that surprise, bigger than expected rate hike and, of course, RBNZ decision that is due tomorrow. It's expected to leave things unchanged, but a couple of other things on deck as well this week, Yvonne.
Yeah, U.S. core PCE numbers, inflation numbers are certainly going to be front and focus, especially for the bond market now that we have seen this global DM sell-off ease off a bit, given some of the Iran headlines of late. And you take a look when it comes to the treasury market, the key question is, we talked about last week, have we reached this kind of new range for yields? I think this week has been, have we reached a peak for DM global yields as well? So certainly that's one thing to watch here very closely as we continue to see treasuries bid up here this morning. Let's bring in Wei Yao, global chief economist at Societe Generale. We just saw Sri Lanka hike 100 basis points. BI last week with 50. BSP saying they're behind the curve. I mean, are we underestimating how deep this tightening cycle could look like?
I think it's possible. It's quite possible given the magnitude of the inflation shock. I guess nobody expected this blockade of the strait lasting this long, right? And here we are. And I think for the EM central banks, they're definitely caught between bad and terrible options because they need to. It's actually less of the domestic inflation for them. It's more about the currency stability, the capital outflows. And now there is more expectation even for Fed to hike. This is creating extra pressure on them to act.
Do you think that they can still stay on hold then, the Fed, this year? Or do you think that there is more pressure now?
I think it's definitely not over. Right? As we see, the currency response to some of the decision, it just depreciated right after. Right? So it shows that the pressure is still building. I mean, each day passing by without the flow through the Strait of Hormuz, the pressure will continue to build.
Wei Yao, what are you expecting if the strait does reopen? I mean, are we then set to see yields easing off a little? I mean, there's this whole argument that, it's going to take months for any sense of normalcy to return. What does that mean for an era of elevated yields?
So even if the strait opens, indeed, it would take months to normalize. But in that situation, at least we know where is the peak, right? The inflation will not return to where it is. The pressure will still be there. But it definitely removes some of the downside risk or some of the even nastier risk when it comes to inflation. And for the yields, I think the question now is, whether the central bank can be credible in terms of managing this inflation pressure. If you have a central bank like RBA, willing to take action earlier and quicker, the yields actually could be anchored sooner.
What are you seeing in terms of the policy options for some of these central banks? Because it does seem like there's not a lot that they can do, whether you're looking at Indonesia, India. I mean, they've been very creative, I think, in India in terms of helping to defend the rupee. What are you looking that's on the cards for EM central banks?
Well, they don't really have a lot of good options indeed. What they can do is keep trying to be creative, but the creativity runs into some limit at some point, right? So essentially, I think we will have more central banks delivering more hikes because, the currency pressure just cannot be simply resisted with capital flow measures. So in this case, I would think, RBI would not be too far from a hike now.
China, I guess you could say, has been resilient, but the April data was quite soft. I'm just wondering, is this just a one-off? I mean, there's been so much hype about AI investments and AI exports and the like. I'm just wondering, there's a bit of disconnect here.
Well, I think actually the April weakness has more to do with the structural issue than the Iran. situation. Iran may be, bringing back some confidence problem, but you look at, the investment, particularly the investment contracting again, right? That's just, in a way, that's what China should experience now, given all these excess capacity, right? So how can you ever cure this excess capacity problem is to stop or slow the investment cycle. So I think, this structural adjustment is going to continue for quite some time. Meanwhile, when it comes to the Iran situation, at least China doesn't have an inflation scare. That's the good news for them. PPI is higher, but it's not really passing through to the downstream. It's very clear. It could show up as better profitability for some companies, but overall, I think it's adding some challenge to China, but it's more of China's own problem to solve.
This K-shaped recovery or K-shaped economy, it seems to be coming back in a big way, where you have, manufacturing doing still quite well, exports are still doing quite well, where the consumption side continues to head the opposite direction. Do you think the sort of two-shaped economy can continue to still deliver growth or even some sort of reflation?
Yeah. The way I look at it is actually more about, investment doing worse than consumption. To me, that is actually a good sign. Right?
Why?
This paves the way to rebalance.
I see.
Right?
Okay.
It paves the way to more disciplined capacity growth, and essentially it will limit the supply down the road. I think for now, the manufacturing doing better is also, as you pointed out, is all AI. You look at the Asia trade data, it's all Asia AI trade. If you exclude AI, things actually don't improve much. It's pretty much stagnant.
It's interesting also because there seems to be a rumbling sense of this becoming a bit of a social issue. I mean, the pressure that governments and companies are under to redistribute the gains from AI. But I mean, aside from that, this is really a global issue. To some extent, we're seeing that in the US at the time where Kevin Walsh has taken over. What are you expecting in terms of his ability to build consensus at the time where, there's so much uncertainty out there, not just from AI, the impact from the war as well?
Yeah, it's going to be a big challenge for this new chair, right? I mean, even before the Iran war, the inflation was already sticky. It was already getting harder for Fed to justify any easing. Now, with this upside risk from the Iran, the oil energy inflation, it is just basically eliminating all the scope for easing. Now the question is the Fed going to hike? I think Walsh has a record of being a really good communicator. We do believe that in most likely situation, he could still kind of manage the ball in a way, just making no move. But it's going to get harder, especially if we see core PCE persistently, kind of sustaining above 3%, even well within second half. Then the high core is going to be very difficult to resist.
You've been writing a lot about AI. Do you think AI is inflationary and could actually generate new demand for economies?
Well, I think AI at this point, to me, is very clearly inflationary because it is, it's very clear we can't build a computing power fast enough, right? You look at the entire kind of dynamics along the supply chain. Memory chips prices are surging, right, which leads to a lot of kind of downstream prices also moving up. You're also looking at the electricity prices are pushing up, right? So AI is doing the same thing as the oil shock. It's stressing the supply chain. It's adding to the inflation pressure, at least for now. We can see productivity showing up more later, but at the moment, I think it's more inflation than disinflation.
Have you started to map out even just what it could mean for jobs? I mean, do you think that we could be seeing, with productivity gaining, that jobs could be significantly, or the whole labor market be reshaped?
Well, I think it's almost certainly going to be, but the timeline is going to be very uncertain here, right? For now, we think, at least this year is more about capex.
Okay.
Next year, we need to see more sectors actually showing productivity gain as a result of AI.
Wei Yang, it's great to have you. Global Chief Economist at Societe Generale. We have plenty more coming up. This is Bloomberg. All right, we're talking Samsung, but not exactly Samsung Electronics here today. Look at the electromechanics unit here, one of the biggest movers on the Kospi here right now. So at least 3 brokerages have lifted their price targets on overall AI optimism here. So they're talking about when it comes to, they're the biggest beneficiary of the AI super cycle for Samsung Electromechanics there. We're up more than 18%. We got plenty more coming up. This is Bloomberg.
It's 11:29 a.m. in Tokyo. Japanese markets going to break in a minute and take a look at how we're seeing the pullback from yesterday's highs on the index. The Nikkei, the topics as well. And this is coming as some of the chip stocks that have benefited from memory trades, including Kwok, facing a bit of pressure. But you are still seeing the likes of SoftBank. That is a stock that has risen, 50% in the span of less than a week, really benefiting from this tailwind from the focus on AI valuations from SpaceX, OpenAI maybe as well. And then think about what we've seen in the past week, NVIDIA, the chip stock rally that's really fueled the optimism surrounding SoftBank. So helping to cap some of the declines you're seeing on the Japanese benchmark. Dollar yen still sitting just under the 159 handle. You are seeing the 10-year around 2.7. I think the continued concerns, they are still there when it comes to not just the 10-year, but the longer end of things in Japan. Take a look at how the rest of the region is faring. Of course, today is a day where South Korea has been partaking in this chip stock rally. Yvonne, you just spoke about some of the broadening out of the South Korea trades. It's interesting how investors have also refocused to robotics or embodied AI. So looking for new ways into the AI investment themes. Today, the benchmark is still sitting about 0.5% higher in the region. You're seeing S&P 500 futures also well in the green. The dollar is flat. We did see a bit of slippage yesterday, along with the declines in the dollar or the Brent prices, I should say, against the backdrop of these US-Iran developments. It's interesting the kind of turn that is taken. But overall, you are seeing some of the pullback in oil prices, I think, helping to ease some concern when it comes to treasuries as well. Supportive backdrop macro-wise when it comes to stocks, and you're seeing mostly positive across the board. Yvonne?
Yeah, as you look, of course, beyond just the benchmarks, you got to look for themes, right? And I think that's particularly what you see in China. But when you look at just overall the theme of robotics, right, this whole sort of theme of physical AI is really kind of taking shape in this part of the world. And really, it's not just from China and the humanoid robots and the technologies that we're seeing there. But take a look at stocks like Hyundai Group, for example. You have some Japanese names as well, which they've really been flying, right? I think we're tracking here like the Fanuc, Yaskawa, also Unitree is certainly the big one to watch given this morning's news that they're fast tracking that IPO on the scoreboard as well. So we got to bring in our thematic analyst, right? Let's bring in our Shirley Wong from Bloomberg Intelligence, who've been tracking all things when it comes to embodied AI. Is this going to be the next sort of phase in the whole AI story?
Yeah, it really does stem from what we've seen in the first half of the year and going on to the second half of the year. So in the first half, we did see a lot of geopolitical uncertainty, and that's led to some risk-off behavior. And so we're seeing this big rotation underway into real assets. And real assets does include things like data center infrastructure, commodities, materials, and heavy equipment. So these do tend to offer, like more tangible value and cash flows in a set of volatility in the market.
And it's really going to just continue to drive a lot of the dispersion that we're seeing within the tech space, right? Where people are looking for the AI and AI adjacent sort of sectors now.
Yeah, exactly. So embodied AI, what I like to call physical AI, is one of those adjacent types of themes that we're seeing, and it's carrying this knock-on effect from the AI type of, enthusiasm. And so we did see some AI volatility in the first half, particularly in the software names. But the conversation is around embodied AI, physical AI, monetizing and commercializing on their research and their product innovation. And so embodied AI is essentially, those that can integrate AI into their physical systems. And that does include robotics, autonomous vehicles, even data centers as well.
For AI, given the capex, I think investors are always looking out for the next big thing, right? So beyond, what we've seen already and then embodied, are there other key themes that you're watching out for in the second half of the year?
So speaking of capex, we do have, analysis that we did with our global team is that AI capex on a global level is going to reach $1 trillion this year in the next 12 months. So that potentially a lot of that could be allocated into embodied AI, physical AI types of systems. So the potential is that, we do see that some of these frontier tech themes, such as space and humanoids, they're looking to commercialize, they're looking to monetize, and so they're ready for to move from the research labs onto the IPO stage for this year is what we're seeing a lot of as well. And for the space theme, we did launch a space theme this year, and so within our space theme there is things like satellite communications, companies that are related to, of course, the rocket manufacturers, the component makers of that, as well as those that collect space data, and also those that are involved in the cyber attacks that potentially, are related to the space network as well. And so those types of themes, we've seen space stocks in our space economy index. Those have gone up in terms of valuations up to 97 times their PE.
Wow.
So a lot of investors are placing, that type of evaluation onto those.
Is that warranted?
Or
do they make money, these space companies?
We'll have to wait and see.
What about the SpaceX IPO? How should we be looking at this one?
Our U.S. team has done some excellent research on that. Because SpaceX still, hasn't gone IPO yet.
Yeah.
But we potentially, do see that there is a lot of potential in the space theme overall.
Yeah.
And in the Asia space as well. They're developing their space programs.
I want to bring back to the whole agentic AI, or at least the embodied AI space. Everyone's been talking about Chinese humanoid robots and the technology that we're seeing there. But how do you see the competition within the region right now?
So we look at this robotics theme from a supply chain angle. So so we're dissecting the robotics theme, in terms of the components makers, and in terms of the robotic makers, as well as the humanoids. Which is a different set. So for the humanoids one, we're looking at more of it from an AI angle, in terms of their cognition and in their brain types of skills that they have and the ability there. And it really does vary in terms of regions as well.
Yeah.
But we did look at the R&D efficiency, which is how many sales are generated for every R&D dollar that is spent. And we do find that overall in the tech space, the Asia R&D efficiency is a lot higher than those compared to the U.S., for example.
Interesting.
So that's something to watch for in terms of cost efficiency, research and development in those areas.
Okay, Shirley, great stuff. Thank you so much for bringing your research onto our screens here. Shirley Wong, Bloomberg Intelligence, thematic strategist today, talking about Asia's embodied AI monetization. Of course, we'll take a look at when it comes to earnings as well. Traders have pushed bearish bets on Xiaomi to a record ahead of its first quarter results coming out today amid concerns over rising memory costs and escalating rivalry in China's EV market. For more, let's bring in our Asia transport reporter, Linda Liu. She joins us from Beijing. Tell us a bit more about what to expect this time around from Xiaomi.
Like you said, Yvonne, I think the short sellers are smelling blood in the water because Xiaomi is facing multiple challenges. On the chip memory front, the rising cost has seen Xiaomi really has to cut back on selling their cheaper, lower margin phones because they just can't absorb that cost increase. So we saw that in the first quarter, Xiaomi's global smartphone shipments fell significantly, around 20%. Most of that would be cutting down on shipping the lower cost phones. They're really going to have to push into the luxury segment to try to essentially recoup some of the margins. And you have on the EV front facing a lot of competition in China, even though the Iran oil shock is supposed to bring a boost in demand to the electric cars. But unfortunately, in the China market, it's kind of different to the rest of the world because government subsidies for promoting EV purchases are starting to be scaled back, and that has really hit demand. So we've seen Xiaomi is trying to bolster its EV lineup. They just launched a new SUV, which is the performance version of the SUV, and the pricing level is lower, I think, than what a lot of people have expected, and also bringing out a more cheaper entry level version of the SUV. So it seems like Xiaomi is really hoping that having more affordable pricing in its EV segment will help sustain the demand.
Linda, can you talk to us as well about, Xiaomi had looked like it was making a bit of headway. How are things stacking up when it comes to market share versus the other EV makers?
So Xiaomi has actually been doing fairly well in market share for such a young company in the EV markets. At the recent launch they just had in Beijing, Xiaomi founder Li Jun said that they are really hoping to compete head-to-head against Tesla, really hoping to take the title of China's best-selling SUV, the Model Y, away from Tesla. So Xiaomi is growing market share very fast, but unfortunately in China, a market with more than a dozen car makers competing for customers, it is getting more and more challenging to maintain the momentum. So we're going to really watch closely to see whether Xiaomi can keep coming out with exciting new EVs that will put it ahead of its competitors, as well as ramping up its production to really help boost the demand.
Also, earnings coming out when it comes to Pony AI. So this is, of course, the robo-taxi maker, Linda. What are we expecting this time around, too?
So analysts are forecasting quite a big jump for its first quarter revenue, somewhere of 50% at least. But the metrics such as net income is still going to be looking under pressure. Loss is expected to widen in the first quarter as the company is ramping up in the overseas market. You need to keep investing into R&D to sustain the technology development. So Pony AI is in a very exciting growth industry right now, but investors, I think, could have some doubts about how much of this capital outlay it needs in these early terms to really help develop this market. So we're also watching for any breakthrough in legislation-wise in China. We reported that China has suspended issuing new robotaxi licenses after Baidu, one of Pony AI's rivals, experienced a glitch in Wuhan. So once the suspension lifts, which we're hoping to see in the next few months, then companies like Pony AI can continue to ramp up its fleet size, which it sees as a really important development to help it to bring it closer to profitability.
Yeah, the Apollo Go program, I think, faced a bit of a stumbling block. But Linda, to your point, with the R&D outlays that these robo-taxi makers are facing, how do we square that away with the extent in which, it's still a competitive backdrop? How much pricing power do these players have?
Yeah, the pricing power, I think, is a tricky metric to get right for these robotaxi companies. For one thing, they actually would be able to charge a lower pricing in some circumstances than conventional taxi operators, because having a human driver is one of the biggest cost factors for running these taxi fleets. So once the robotaxi companies operate on a fully driverless scale, so without human drivers involved, they actually are able to remove a big cost factor from the operations. So that's one thing helping it in its favor. But on the other hand, they can't actually realistically charge too much lower than the existing taxi fares in the cities that they operate in, because right now there's a huge debate about AI replacing humans in all of these industries and workplaces. So I think regulators in China, as well as in other parts of the world, have to consider maintaining, I think, a minimum competitive competitive playing ground for the taxi drivers against these robotaxi companies, and that at least in terms of pricing, they might have to maintain a similar levels so that the robotaxi companies won't be able to undercut the existing taxi operators so quickly.
We'll watch those results, Linda. Thank you so much for getting us set up. Great stuff. Bloomberg's Asia transport reporter Linda Liu there. Now to some of these other corporate stories we're following as well. The Shanghai Stock Exchange says they'll hold a meeting next week to review the IPO application of Chinese robotic startup Unitree. According to its prospectus released in March, Unitree was planning to raise about $620 million with a listing on the Star Board. It said the proceeds would fund research into AI models for robotics, develop new products, and expand manufacturing. One of Samsung's smaller unions is reportedly seeking to halt a vote on a tentative wage agreement between the company and its largest union. Yonhap says the union representing non-semiconductor workers plans to file an injunction with the Suwon District Court today. The tentative deal Samsung struck last week staved off a potentially catastrophic strike. BHP has reportedly pulled back on key decarbonisation projects in its West Australian iron ore operations. According to leaked internal documents cited by The Guardian and ABC Television, the company last year shelved or deferred solar, wind and battery projects. A BHP spokesperson says many technologies the mining industry needs to achieve net zero are not yet ready to deploy. Plenty more ahead. Keep it here with us. This is Bloomberg.
All right, we're checking when it comes to coke and coal futures here this morning. We obviously saw a spike as we kicked off the week here after, of course, that deadly coal mine blast in Shaanxi province over the weekend. So certainly we're continuing to track where the things lie when it comes to the investigation and the like here today, Avril.
Yeah. We are continuing to track that story, of course. Our Bloomberg opinion columnist David Fickling argues that China is increasing safety risks by pushing coal production too hard to ensure energy security. David joins us for more on his latest piece. David, I know you've been writing about this for a long time. To be fair, though, China has made some headway in terms of safety in these coal mines, but I guess there is a bit more pressure now given the ramped up security, energy security needs. But talk to us first about why these incidents keep happening.
Yeah, I mean, as you say, there have been huge improvements. You go back to the 2000s and there were 5,000 to 6,000 people dying a year in China's coal mines, and now there's still quite a lot of these accidents. This is a big individual one, but it's with the totals in the sort of hundreds per year. But coal mines are fundamentally dangerous environments. They're obviously full of coal dust, which is very flammable, but they also produce a lot of methane. And you mix those together, all you need is like a spark from a conveyor that's not been maintained properly, and of course that's always going to be a higher problem as as the government's pushing more output targets, produce more coal, maintenance standards tend to go down. All you need is for that to happen, and a very sort of serious accident can happen. And one thing I'd say about this mine, it's a coking coal mine. It's a deep mine. It sounds like the blast was about 300 meters below the surface. These mines tend to have a lot of methane. They tend to emanate a lot of methane. Coking coal is associated with these gassy deposits. Methane tends to increase the deeper down you go. So it's no surprise that this is the sort of mine where we're seeing this happening.
And you wrote that if reforms to the steel industry, David, might actually help this. How?
Yeah, I mean, this is an underappreciated point, but of course, coking coal is not burnt in power stations. It's used in blast furnaces for producing steel. And coking coal, as I said, is the type that is particularly associated with some of these disasters. A lot of the thermal coal for power stations comes from surface mines in open pits, and the risks are much lower. Now, China has plans to shift a lot of its steel production away from blast furnaces and to electric furnaces. They don't use coking coal, and as they're also better for the environment. The emissions from them are much lower as well. But the steel industry has been pretty reluctant to hit those targets. They wanted about 15% of steel from electric furnaces last year. The industry is way below that, and is actually there's some indications that it's sort of deteriorating further away from that. The industry seems reluctant to shift. A lot of the consumers, this shift from construction steel to manufacturing steel for cars and appliances, a lot of those consumers want some of the sort of higher quality steel that comes best from blast furnaces. So we're not seeing that movement yet. But when we do, that will decrease the demand for coking coal and the risk of these disasters.
And of course, working towards minimizing such incidents would also be helpful for energy security. I mean, how should we be thinking about it?
Yeah, I mean, a thing to bear in mind about this, that a lot of the world at the moment is panicking about having too little methane, essentially, because it's LNG. This is the stuff that's blocked behind the Strait of Hormuz. But of course, in China, the problem right now is too much methane deep in these mines that's causing explosions. And I mean, that may seem a sort of trite comparison, but when you look at the scale of it, China's coal mines emit about 60 billion cubic meters of methane per year. China's imports of LNG are 100 billion cubic meters of LNG per year. So it's really on the same scale as that. This is a massive amount. Qatar's exports of LNG are similarly about 100 billion cubic meters a year. So if China could actually tap more of this stuff, and it is doing that in Shanxi, we're seeing a lot of coal bed methane is being tapped, then it improves its own energy security. It's not as dependent as on imported gas.
David, it's great to have you. Thanks for bringing us your column, of course. David Fickling there, a Bloomberg opinion columnist. Of course, you can read David's piece today, 3 Steps to Stop China's Mine Disasters. That's available on the terminal. You can also check it out on Bloomberg.com. All right, we talked about when it comes to the Hang Seng, it's not that interesting here today, but look at some of these pretty outsized moves across the chip space here today. SMIC, Hua Hong Semi on the Huawei story. And then you have the likes of Lenovo, where it's actually outperforming the chip space here. Goldman just upgrading their price target here by doubling it. The stock's at a record here right now, and they're really citing strong profit outlook in the firm's AI server segment and revenue potential as its AI agent business. So that re-rating continues for another day. That's it for us in the China Show.